So, welcome to Bootcamp Day 10, and today we're gonna actually talk about something really important, which is liquidity. It will be hard, I will be making multiple parts since liquidity, as I said, is the most important part in trading. And if you master liquidity, you will be profitable. I am decent at liquidity, I would say. I think I have learned most of the stuff and have like a feeling for liquidity, but still I wouldn't say I mastered it. So I will give my thoughts, but you should probably watch different people as well to get different opinions on that and really master it. As I said, it's a really big topic and I just gonna give the basics. So we're in the charts now and I first wanna go over how it looks like with lines, as I always do, with like this, and explain the concept, and then we will go in live charts and spot it, okay? You probably heard of support and resistance. That is the first thing you normally learn if you wanna look into day trading, because every second video of day trading with Forex is about support and resistance, which isn't bad if you master it. It can work, but I think smart money concept what we are trading is just simply better, you know. So as a smart money concept trader, we really wanna look for the entries of them. So if we see like a support resistance trader enter here, we know that they put their stop loss here. I will explain it in a bit. They will put their stop loss here and maybe aim for that, okay? So this point is actually the important point, because you know what the stop loss is. I explained it to you. If it hits the stop loss, it will automatically sell, right? So what will happen if it automatically sells? It will automatically sell, so the price will push down again. So it's pushing up, activating that, and then it will push down again, because a lot of stop losses are here if all of them entered here. So the price will automatically push down, which will just have an impulsive move. After impulsive move, there's normally a correction, and that's where we want to enter as smart money concept traders, okay? So I'm gonna explain why it works. Support resistance traders see certain levels as a support or resistance line. If you can see here, it bounced on the level, and last time when it went into that price level, it actually just went down. And then again, it went into that price level, and then it went down again. So they see it as a resistance there. So their thought is, if it goes back here, it will actually go down again. So what will happen is, they see it here, bounce, bounce, they will enter here, aim for the next resistance or support right here, because there's another two bounces. So they trade like this, and then banks will take money. They have so much money, they can't even buy orders. Since if they buy on this level, there won't be enough orders to fill their buys. So they want to buy so much that they first of all have to fill that orders. How they do that is they activate the stop losses of them. They take a little bit of money and activate it here. Activate stop losses, and buys or sells everything of that. So they have they can sell this, and they will make impulsive down move, like a really impulsive down move. After that, we will have the correction, and then we can enter, as I just said. So the banks simply want to activate the stop losses, or hunting for the stop losses, and that's the important part to understand. Sorry, my English isn't really perfect right now. I try my best to explain it, but it's hard to explain in a different language since I'm not native. I hope you get how it works though, and I will show you real life examples. A really good one. Here, perfect, instantly. As you can see, I talked about it. This area, there are a lot of bounces, so they see it as a resistance. What happens here? It goes through completely, makes an impulsive up move, retraces to it, so this would be the point where we enter. It's 1 hour, so yeah. This is the point where we would enter, maybe make the stop loss around here, and aim for the next liquidity, which would be the next liquidity, this price range here. So we aim for that, and just with that, we already have a win. Just with liquidity, even though this was also liquidity. You just want to see points where price reacted off multiple times. So here, react, react, react. Oops, this was a little bit bad. 3 bounces, we see it going in there again, and it actually bounced off it again. So this is an even bigger liquidity. So next time when it goes over that, there will be a lot of stop losses right there. It will probably make an impulsive down move. Understood? There are obviously multiple forms of liquidity. It's just I just explained the support and resistance, but we as a smart money concept trader could also be liquidity. Liquidity just means that the point where the stop losses are. And if our stop loss is on the point where where a lot of stop losses are, we will probably get stopped out since they will hunt for the cheapest liquidity that they see, where a lot of stop losses are. Since support resistance is traded the most stop loss that get hunted for is support resistance. That's why we want to be individual in trading and don't trade like others do. But it's simply hard if to find something that like works for you and it's also like really individual. So you go with smart money concept that isn't traded enough to be liquidity, but sometimes there are actually points where smart money concept gets stopped out as well. But that just happens since the market is about odds. So you just try to have like a high win rate with high risk reward, and you will be profitable. I hope you get the simple liquidity. I will be going over different cases and different examples about liquidity in next videos. And yeah, just subscribe and you will see the next videos. Bye bye.